Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Well, let's take a look at some stocks on the move today. In Europe, I'm Stephen Carroll, and I'm joined by Bloomberg's breaking news editor, Louise Moon. Louise, good morning. Let's start with Schneider Electric. Their shares rising this morning on the markets.
Indeed, yeah, they've laid out a big buyback plan. So that's up to 3.5 billion euros through to 2030. So a big sum to announce this morning. They also plan to sell assets equivalent to about 1.5 billion euros over that same period. And they also set quite ambitious growth plans. So this is all driven by AI and electrification. So they're really benefiting on the back of that. Essentially, what they do is they provide equipment that's needed to run a lot of these data centers. So benefiting on the back of this growing demand for those data centers, for AI, for electrification. We already saw it. They had results recently, their latest results. They exceeded expectations. So this is just kind of more positive news this morning on the back of that demand. So this buyback plan being laid out.
Yeah, and shares up 3.3% in Paris at the moment. Let's go to Entain next, the gambling giant, the CFO stepping down after 13 years.
Indeed, yeah. So his name is Rob Wood. So he, as you say, was the CFO and also the deputy CEO. So stepping down next year after 13 years. He's going to be replaced by a man called Michael Snape, who is currently CFO IDS, which is the parent of Royal Mail, obviously recently taken private. So he oversaw that sale and the delisting of IDS. Before that, he was at companies including Tesco, so he's got quite a big track record of big companies in the UK. So he's going to replace Rob Wood next year. Shares are falling. They're actually the biggest drag on the FTSE 100 this morning, potentially because Wood, he's been seen as pretty instrumental for a lot of change that Entain has had in recent years. So rapid expansion, entry into the US market via a JV with MGM. He was also part of their rebrand in 2020. So potentially that's contributing to those shares falling this morning. It's also kind of the latest thing that Entain's got to contend with. They had their former CEO left in February. They've also faced a string of issues, including legal and regulatory challenges more recently, and they're also very recently having to deal now with higher taxes that have come in the budget. So a lot to contend with, and at the same time, a switch of leadership right at the top.
Yeah, okay, well, one to keep an eye on then. Turning to travel, and Wizz Air shares are lower this morning.
Yeah, so they have been downgraded to an underperform by Bank of America. So the analyst is citing two main things. So one is a concern over costs for Wizz Air, and the second one is increased competition, particularly saying that that rival Ryanair is strong competition in Wizz Air's key region of Central and Eastern Europe. So those two key concerns from the Bank of America analyst. They also at the same time lowered their estimates for 2026 and 2027 for Wizz Air. They reiterated at the same time IAG is their top pick. So shares of Wizz Air falling on the back of this. And if you look at the analyst ratings, at the moment they've got 6 buys, 12 holds and 7 sells. So potentially a bit of tentative thinking from analysts there and a mixed picture. So, yeah, downgraded from Bank of America, which is pulling down those shares this morning in London.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.